All right. Good morning, Stocktwits Nation. This is the Daily Rip Live. I'm Katy Perry here with Shay Boloor and special guest Howard Lindzon. What's up, guys? How'd your weekends go?
I mean, I'll let Howard speak first because mine I have to remember a little. It was a little bender I went on the past couple of days. I celebrate St. Patty's Day privately, so I'm not gonna say it publicly. No, I'm kidding. It was a fun
I
weekend. I'm just recovering.
Good.
It's me.
Howard, how about you?
I'm 6 years old, so I took a lot of aspirin, and
I
at
didn't know
one
where the
point,
aspirin thing was going. I thought you were going to say acid.
no aspirin for Howard. I played. My son's in town. Played a little golf. Uh, Had a 50-mile bike ride this weekend, which
No big deal.
Did you
big
say
old
five
man.
zero bike
Five
ride?
zero, 5-0 shot.
Is
Jeez.
that on the Peloton or
You know,
were you actually
yeah.
moving?
With other human beings here in Scottsdale, we had a great time, and kind of excited for this market open to see what it is. It's kind of a blasé market open, but I was kind of interested to see, where we're gonna go today. We had a bit of a bounce Friday, so I was kind of just seeing what would happen over the weekend, what our supreme leader would do over the weekend. So it
Yeah,
seems
I mean,
pretty
it
quiet.
looks
It
like
seems
we just
pretty
got
quiet.
some breaking news in that
Oh,
Pepsi has gone ahead and bought Poppy,
okay.
1.6 bill.
That's a marking move, moving
Do you
announcement right there.
can I say something? I think Poppy's disgusting. This is not financial. I just don't like it. Have you guys had it?
I get it at Air One, but it's a good alternative to like
Erewhon.
soda. Yeah, Air One. But yeah, it's not that good for you, but it's not supposed to be. I think it's the same thing as Celsius. Like it's not good for you, but it's better than alternative, which is traditional energy drinks. But yeah, but going off of like what Howard was saying on the Open today, I am watching it because the last three Fridays have been green. The last three Mondays have been bloody. It's just never had a follow through. So pre-market this morning, I mean, SPY just went red, I guess now. But it looks a little like, ooh, what's going to occur? But like, I do want to say like last Friday, it did feel like they were showing signs of a potential near-term bottom. I'm still defensive because we're below the 200 moving day average on the SPY and QQQ, but we had good breath. The risk on names were running, and the VIX was cooling off. So the chances of bouncing like, going forward, in my opinion, feels like okay, there might be a relief rally until we test those key levels in 200 moving
Did we lose
I,
Shay?
he's mid. Do you agree with his line of thinking there, Howard?
Yeah.
You in the
Well,
same wavelength? You think the bounce is imminent?
I was gonna jive with them. I don't know. I'm never. This has been one of those weird tapes where this. I shared some of the data from Stocktwits. The Stocktwits social VIX has really enjoyed leaning into the negativity, whether it's around Tesla and so this is a new kind of phenomenon socially. Is that like the stream is either equally behind or equally as mad at Elon as they are at the president,
Yeah.
right? So it's like usually the disdain has been held for a Biden or Trump, and now, which whatever. People want to mix politics and the markets are not going to be thrilled. But at the same time, now you have someone just as equally dominant. It's not like it's like a vice president or a king that has a second person that is equally reviled or revered as the president. And it's very weird because it's very angry and it adds a second layer of. So the sentiment on StockTwits has been extremely negative
Mm.
and extremely correct so far. And I think when you have such a big sell-off in growth stocks, um, we've hit levels that usually there's a bounce, right, over the last 10 to 12 years. And like Shay said, now we're below the 200 day, and bad things happen below the 200 day, and from all the textbooks. So it's like one textbook says, hey, when we get in these type of positions, you should typically buy stocks, and I am. But there's always that one time, and I think great investors also have to remember that you don't want it to be that one time. So, anyways, it always becomes like, this is kind of and then you have the 3 Fridays that have been okay, and then the 3 Mondays that have been devastating. And over the weekend, we're firing rockets at the Houthis, and we haven't heard about tariffs for a couple hours, and so it should be an interesting week.
Yeah.
I'm
Hi,
coming in
welcome
thinking
back.
we bounce. I'm coming in thinking at some point today or tomorrow there is a good bounce,
Okay.
but at the same time, Apple's not been bouncing. Amazon's been struggling. Microsoft's been struggling.
FedEx is
Um,
always one to watch, right? As a sort of harbinger of what's going on. Shai, are you tracking that one for later this week? Because I know that one can indicate just movement of things indicative of what's going on more broadly. That's a big one that's coming up this week.
Yeah, I mean, I think there's some real fears on growth, and I think clearly, just like how enterprises are adjusting potential tariffs down the line, and that's causing the GDP to look really bad. Um, not out of nowhere, just all of a sudden, flip of a switch, its GDP just is really bad because of everything that Trump's doing. Same thing goes for consumers. Consumers read these headlines, and you're seeing commentary from a lot of these large retailers the past couple of weeks where like we're seeing a substantial change in behavior from the consumers. It's because they're not idiots. They read all these legacy media headlines, and there's fear out there now because when you hear the term detox that the economy is going through, it's going to be at the weight of the consumers almost every single time because that's just how capitalism works. The enterprises will wiggle their ways out of like this won't hurt us too much. It's going to fall on the consumers. Same thing happened during COVID. Inflation, it fell on the consumers. They took on debts, etc. Like same thing is going to kind of happen in this high stakes poker game where the consumers are going to get hit the most, and now they kind of have to prepare for the worst. And who knows if they're just being excessive with it because nobody really knows the impact really truly yet or how long this can go about. And if all tariffs are going, tariff war is over next week, I do think we have a pretty explosive rally. Like I really do because this is a tariff led sell off. But if it does happen, if it's like for 6 months, like it sounds like it might be a prolonged thing from every single person that's going on that's speaking publicly. The Fed, Trump's cabinet, like everyone who has their hand in making the decision of the tariff war, they're saying they're read between the lines. It's going to be for a couple months at least. It's just we need this short term pain for long term gain, and I think everyone's just recalibrating how they view certain stocks like growth. Growth is risk on is not where you want to be when we're in this kind of environment. And you're seeing defensive stocks kind of catch somewhat of a bid, ex USA catch a bid. I think just we're in a weird gray area of I think there's gonna be more pain. And for me, when I say defensive, like I'm still adding to my long term positions. It's just I'm not adding to my speculative positions because this kind of environment, it's rare where we have a macro driven pullback to this extent that's not really thesis breaking. A lot of these winners like the Amazons, the Axon Enterprises, the Cloudflares, like these three companies have monopolies in early secular growth trends. They don't pull back typically this aggressively unless it's macro driven. So I'm allocating my soldiers towards those names rather than the Ion Qs, the Rocket Labs. Like those are great. Space, quantum's great. Speculative. They're going to have their pullbacks from something that's going to have like Jensen saying a comment, Elon saying a comment, whoever knows what's going to happen. But this is the time I'm putting my chips towards the safer, defensible ones in growth. And yeah, that's how I maneuver around this defensive environment.
I I wrote a couple things, Katie, and I'll get your thoughts too, obviously. But here's the other thing you're not talking about as an entrepreneur. If we were to pull up, let's say Reddit. Okay, so I was following Reddit for a while, not long, hoping to get in RDDT, right? And you could pull this up, and you can look at Robinhood, but let's look at in Coinbase. So you could look at these three growth stocks. Reddit was trading at 30 times sales. So I was watching it because, you know, at 30 times sales, I was expecting them to start making acquisitions, right? So I got to think at some point Corp Dev's going, okay, there's probably 20 companies we could buy that have unique data sets in a world of that probably on their own couldn't get public or couldn't sell, okay, or rally together to sue the LLMs for unique data. So if you got a corp dev strategy, you got a stock that's running. Now all of a sudden your valuation's cut in half, and like 10 corp dev deals of companies that could have been bought and now are subscale are not going to happen. Same with Robinhood. Stocks at $60. They started to do some corp dev deals, and now the stock's at $36. Vlad, this is the way corp dev thinks, and CEOs think, oh, it's going to be doubly expensive to buy stocks. So it really does. I know these guys, all these people in office, and all these politicians, and all these big shots, Howard Lutnick, they don't know what they're talking about, right? Because they've never traded. Lutnick's been in the market for a long time, but some of the stuff he says is so stupid, and he's already proven himself to just be like a Trump water boy, right? Because Trump's just made a laugh, and Trump likes that. He makes a laugh a stock of Lutnick, right? Like zero trust in the markets now. So you're also shut down the IPO market. One of my companies, eToro, is set to go public. If you don't need capital, why are you just going to come out at 50% below what you were 6 months ago? So again, no different than Gensler screwing companies back in 2020. All the president's done here is close one door to open another door, right? And the door that is really open, and it would be hard for me, Shay, to think that he's going to undo this tariff chat, because it's good. The market went up Friday, even though he's talking about tariffs. So I can't see a world where he's found this new toy. He likes, Musk is no match for Trump. Trump is still in control. Musk, he's probably enjoying this. He's got Musk as his rag doll. Musk is the one who's having the dealerships and the cars burnt. He now had to give a commercial for Elon Musk. Who really looks like the idiot here? Trump always looks like the idiot, when he's on TV. But Elon Musk just looks like being played like a banjo by Mr. Trump, and this isn't good for anybody, because you don't want to give the baby more power and more control. So I think the tariff stuff sticks. Okay, he's having fun with it. There's no, like you said, there's no way that great investors are going to just keep buying stuff below the 200-day moving average if that's where it sticks. I just would argue that what he doesn't understand is that the growth market shutting down has second order and third order effects.
Totally, snowball effect. 100%.
No IPOs, no acquisitions, right? A lot of employees that can't get liquidity and buy their first home that have worked at growth companies for 10 years. So I don't know, like, it's just so random and stupid, and not thinking through second order effects. The second order effect that I keep talking about is deglobalization. Lumber break. Like, if you can't get your goods to build homes, everything goes up in price. So copper is breaking out, lumber is breaking out. Forgetting about they're talking about eggs. Well, palladium, silver, gold, copper, and lumber are breaking out. You don't fucking care about eggs. You can go get your creatine and protein from a milkshake. You don't have to get, or not from a shake, from one of these sugar shakes. So the real world is showing the effects of this deglobalization, and that's, the three of us, like, the last thing we want to go is buy lumber and gold, which has no cash flow, which maybe we're forced to because but we're going to have to go learn a new trick until the president learns a new trick. And there's a couple tricks we could play. We could not play the game and just sit it out, which is definitely one of the possibilities. Or we have to rethink how we're playing the game in a much higher volatile, more deglobalizing world. So I think those are the more important things, and they're not as fun as buying a growth stock. They're not as reliable as buying a growth stock, to be honest. And it seems un-American in many ways to have to go do that kind of stuff and learn something new and rechange your watch list. But I think those are the things that people are going to have to start doing if they want to outperform the market.
Well, I mean, in my circles, like I talked to a few high net worth individuals, they're going straight to fixed income now. They are like they're going either the real estate route or just like whatever
Really?
fixed income route because they think it's going to be even noisier. It's not going away anytime soon. That's going to impact a lot of. Uh, it's a sentiment is what drives the economy. People might disagree with that, but it does. It truly is as simple as that in my eyes. It's just sentiment drives the economy. Sentiment is piss poor right now. It is awful, and it's going to get potentially worse. IPO market is a great barometer on the health of growth, the risk on environment. They're not going to go public this year, in my opinion. It's just too noisy of an environment, and
Who's
who knows what's
Stripe
going to
or who?
not Databricks could be one. Stripe might be another. There's a lot of figure AI. Like there's a lot of robotics companies, new age of defense companies that might not just go, but also like what Howard was saying, like their valuation, they keep having up rounds every
Yeah,
single like
Stripe
couple
doesn't
months.
have to, right? Like that was your point, Howard. The ones
Yeah.
that don't have
Well,
to.
and they'll figure out ways to get employees out. But I'm saying, is that what the employee worked there? They're at a growth company and they want to buy their first house. We're just like I said, and sentiment. I'll just add a little thing to what Shai said. Sentiment does drive things because eventually it drives fundamentals.
Hmm.
And fundamentals eventually, like when the market's going up, drive sentiment. You get FOMO from having
Hmm.
good fundamentals in a good environment that leads to lunatic sentiment, and you get FOMO. At,
Yeah.
at which point you're supposed to do the fundamentally right thing and sell your stocks. And when people start selling stocks, the sentiment changes. So no, they kind of interact with each other.
Yeah.
So you can't have one without the other because eventually
Hmm.
sentiment drives fundamentals and eventually fundamentals drive sentiment.
Here's
Nothing like
the
price.
weird thing to me about sentiment right now is that Trump's approval ratings are like higher than anybody's. I think pre-Obama, which is like insane. But
Yeah.
at the same time, you had the Michigan consumer sentiment trash. People aren't spending money. There's other polls that show people are worried about the economy. So it's like people are measuring their sentiment based on two time horizons. There's the right now where they're like, yeah, I guess it's okay, shaking things up. But then when you asked about the future and more long term, people are like, oh wait. That's weird to me. Like to me, that data the high approval ratings and the low consumer sentiment seems bizarre. And that I think that's indicative of just it's chaotic right now. People don't know what to think. And I think Howard, you're getting at that with just the sentiment on Stocktwits. I had dinner with some of my friends that work at investing brokerages on Friday, and I was like, "What's the vibe? Like, what do the flows look like?" I've been at a brokerage when things were down and everyone was buying the dip, and they're like, it's almost like paralysis. Like people don't know what to do.
Yeah.
They're kind of like, and that's different than 2022, and everyone was like, "All right, cool, buy the dip."
Well, 2022 is hard because if you bought the dip, it bought you back.
Yeah.
Yeah.
Um, and I think people do have a little bit of a memory for that. I do. It was pretty nasty if you were in the wrong stocks. I think it's combined with the fact that, not to get political, the far left's crazy and they take their ball and go home, right? The far right doesn't take their ball and go home, they spend. And also, this time, Tesla's a consumer, for whatever reason, it's in the consumer discretionary space. And so it's the second biggest component after Amazon. So it's kind of a weird. So consumer discretionary space is way down because Tesla's down 50%, which for some weird reason might be driving sentiment. So I think you can't just rely on one aspect of sentiment. That's why I don't trust sentiment in general. But I do like to. It's definitely more interesting to me, like you said, when it's really panic mode, right? So you do have to think about why, especially when, like you said, your friends are talking about. But it's also combined with high prices, right? Like you've got 6% mortgages. When I was buying my first house, they were 6%. And I thought that was cheap, but houses were 10% price of where they are today,
Yeah.
right? And it was easy to get credit if you had a job. Like today kids don't have credit, right? Even my kids, they go through school with debit. They wouldn't even know what it's like to go borrow 100 grand, even if it was offered to them. So the mindset of a young Gen Z or millennial is different. They're not in the mood to go take on credit, and a lot of them that would be in the mood took that on to go to college, right? And you got to pay that back. So it's not like Capital One where you're like, "Fuck you, Capital One. You'll get it when I say so." Um, so I think there's just first of all, it's very tough. I imagine because I own and operate two millennials to be a millennial right now that doesn't feel like they're getting a fair shake. Because I talk to them, right?
Th- They're not. They're definitely not. I mean, like, we're in a new age of capitalism. I think a lot of people don't realize like this is an absolutely new age. Like, being backwards looking will
Hmm.
dictate your future behavior in a harmful manner because we have no leverage anymore. I'm a millennial. We have no leverage, zero leverage. Enterprises, they won't increase the wages because why should they? There's
Yeah,
tools out there now that could replicate 30, 60% of your potential workload that if you just continue accumulating, it will get us there enough to dictate our future behavior on like what the story's telling you. Now, you have to ask yourself like, all right, what do you do now? And this is like kind of the wild wild west of this post AI era where you have to go start from scratch, roll up your sleeves, and figure out what's missing in the environment economy that you can capitalize with the new tools like AI, and then you have to kind of do trial and error. And this is something that is you either a lot of the Gen Zers, millennials, they don't like like they either love it or hate tech. And if they want to not be part of the system and hate the tech side, I don't know the avenue of like how to get through in the world because that's tricky. Like even the artists out there making films, entertainment space, like they are not getting jobs. Hollywood is not the same place anymore. And I think Hollywood is a great barometer of the artistic economy. And that's getting worse and worse and worse. And that combined with the capitalistic economy, which is Wall Street enterprises, that they don't need FTEs or work count. It's like what's happening right now, and inflation is getting worse. Not worse, but like prices are higher and higher and higher, and like it's leading to an insane environment where you just don't know what to expect in 5 to 10 years, and that is fearful
yeah.
because you got clarity, and if you have no clarity, you react poorly.
Yeah.
And both sides were complaining about eggs, right?
Hmm.
So both sides are just messing with the young people's brains. My kids haven't
Yeah.
eaten an egg, I don't know, in 10 years. So that's the last thing my kids I know, and you know
Well,
that
the
from that age.
prices are going down because people just stopped buying them. To your point, like eggs not like lumber. Like
Yeah,
you can swap out an egg.
yeah.
Um, I'm curious on just like the generational wealth building front, especially around like the housing market where that was sort of like the beacon of your nest egg, and that was the sign that you made it back in the day. And I think millennials look at that and they're like, wow, I didn't make it, but they maybe have a portfolio that's equal to what they would own in a home. But do you think part of that's why there's these rumors swirling that Buffett might sell off his real estate business to Compass? Do you think he's seeing something there, or is that just indicative of him wanting to get out of that space altogether?
Well, he has a succession plan, so you would hope that there's some, but yes, I think you're right. I just think there's certain businesses that are going to change, right? Like my wife and I, when we're looking at real estate, we just can't believe sometime. We always reflect, right? If you're my age, there's just nothing you do other than you think about what your kids are putting up with, right? And we're not dealing with like World War II. We're dealing with weirder, newer, high class type problems. But the first thing you do as a parent, you go, I can't believe what this costs. Even if we can afford it, because we all relate it to our kids and go, they can never afford this. Where are they going to get that down payment? And we wouldn't even, as parents, let them do this. We would tell them, if we can't help you to rent, right?
Mm-hmm.
Because we don't want you to take on that burden that could lead to a change of class. So, and even if that's good advice, your kids are going to internalize it in a much different way.
Hmm.
And I see it with my kids. Like, I can't believe some of the negativity that they say at their age when all I could think about when I was young is like, the world is my oyster, can't wait to do things. They're, and you know this, they're not getting married at the same age. I call it the Hims generation, right? Like Hims was kind of a joke, but now they have a product for everything, right? And when I invested in Manscaped, that was kind of the thing. Paul Tran, the CEO, would say there's going to be $1 billion uh, product for every centimeter of the male body, just like there is for the female body. And I go, okay, well, Hims has figured out there's a drug for every centimeter of the male body, hair, balls, you know,
And women's.
penis, whatever you guys call that thing these days, you kids, uh, fat, penis, hair, you know what I mean? Elon has fake hair, Trump has fake hair, like anything goes. Like, so I call it this blue pill economy. If you had told me that Hims would be the voice of this Hims and Hers, I guess, I don't know if it's as popular with women, but we're talking about these weird sodas. My friends launched this Nowadays drink this weekend, which was like THC infused drink that's kind of blowing up. I'm an investor in Liquid Death, like which is a water company in a can. Like
They were rumored to IPO, right?
Anything ish. Yeah, there's rumors of Goldman Sachs, but again, these things at $1 billion, it's hard to get institutions
Yeah.
involved. That's another thing about the markets. It's like when I was young, small caps were like $300-400 million company. Amazon came public at $400 million. Today, if you go public at $1 billion, there's nobody would ever cover the stock. So the world's just very different. It's not a good thing, bad thing. It's just different.
Yeah.
And I think what Shai's saying is some of their friends are coming up with other ideas for how to get rich, how to make their first million. We went through 15 years with ZERP, where how to make your first million was to come up with an app, right? That was kind of a misdirection. I think we're in a better, maybe not in a better direction, but now with interest rates where they are and the world shrinking again because of deglobalization, and tech getting easier, maybe your first million is with a good business, right?
Yeah.
But at least you don't need to hire 40 people. You can do it with 3 friends and some good marketing. So I think there's that recalibration that's going on much. So again, combine all that with what young people are going through, it's a difficult, and that's why I think you have the consumer sentiment where it's at, is you're throwing a lot of new stuff at a lot of people at the same time. Higher interest rates, tech that probably is long-term interestingly good, but portrayed as evil. We don't trust the tech companies. It used to be that Google do no evil or whatever their thing is. No one believes that about any tech company anymore. You've got OpenAI, you got Microsoft, you got Zuckerberg, you got Elon, you've got the government out to get you. The government hated Elon, the right hated Elon, now they love Elon, right? So, there we go. Is that the opening bell?
Wow. Cheers for the government hating Elon. Look at that.
They did hate him, now they love him. They wanted coal. Anyways, so what else are you seeing?
I think Shai made a good point on the optimistic angle, which I think you were getting to, is like it's a forcing function of like getting creative in other areas. I had a friend who also I've worked in like tech, digital my whole career. She literally sent me a business plan this weekend about this plan to open a franchise in like LA of this popular East Coast. And I was like, you know what? This is interesting to me. And I think you're seeing, yes, doubling down on like tech and how to use the tools and all of that, but also people wanting to like franchising. Like you could make a lot of money owning a bunch of McDonald's. That's like a new kind of thing that like when I was coming up in my career, no one wanted to do that. That wasn't cool. You wanted to work at Facebook. You wanted to work at Thrillist or one of these digital media companies. And now it's like people are like, what else is there? Can I buy this like laundromat chain? And I think that's kind of fun and interesting. I think it's hard right now, but it forces you to think differently, exactly to what Shai was saying. There's other ways to get to building wealth. It might not be owning a home.
That's what I would say to you. We've got to get to the place where we turn this over. So I think while everybody's looking over here, deglobalization, which is truly coming, right? Whether we like it or not, right? Where deglobalization may affect different groups of people more than the other. For me, I worry for deglobalization to going to London or someplace and getting booed or kicked off, not for being Jewish or this, but just for being an American. I know that sounds far-fetched, but like that's not really what I want in my 60s. I want to be able to travel the world and be the friendly American, right? So that's going to affect how I think where we travel because we're fighting with Canada. Now, I know it's kind of a stupid fight, but like, and I'm Canadian and I have friends there, but I don't want to go to the border and go, your president's a fucknut, right?
Yeah.
Like, you know, and just get hassled wherever I go because I'm an American, right? But the good news is, you're right. Like, it might force kids to turn over their phone and go, the phone isn't the solution to everything. There's nothing wrong with owning a good business, right?
Yeah.
And it doesn't have to be a unicorn, right? And so we had some really bad habits from that era of ZERP, and all those people now have podcasts, so you can easily find who they are and avoid them. But they're teaching you stuff from an old playbook, right? If you listen to the All In podcast, they're talking about stuff. They have no game. Their only game is to use their money and go into politics because the game they were playing is over, right? They don't even talk to their kids. Okay, if you talk to your kids, right, you realize they need skills. They don't need to build apps. AI will build the apps for them. They don't need 20 engineers. They need some marketing skills. They need some interpersonal face-to-face skills. They need to go look people in the eye, get on a plane, and do all those things. So those skills are coming back, and there was nobody going into marketing, Katie, as you know, you're a good marketer, and you understand, you know, how to get out there and build a business. There's nobody needs an engineer. I'd rather hire a good marketer than a good engineer right now, especially if I'm going to go buy 3 franchises. An engineer's not going to be able to help me. I can go set up a website and a beehive for $4, right? And have ChatGPT write a daily email for me and get out there on the street and get traffic into my restaurant. You know, podcast isn't going to help. So these are new. It's like Trump's turned back the clock to the physical world.
Yeah.
Right. And that's
Which
what deglobalization does. That's what deglobalization
I mean, I
Yeah.
think that's also why a lot of middle America loves it because they were
Yeah.
feeling they're getting left behind. And now it's
Yeah.
returning back to their comfort circle where they feel more controllable of what the future is going to be. Where for a lot of the larger, I mean, that's why there's just conflicting heads of like, where should we be right now? Should we be back where before technology took over? Or should we allow technology to reaccelerate our future?
Well,
And
technology is coming no matter what. You can't turn the
that's true.
machines off. So the people that are rooting for this are wrong. Okay. All they're going to get is that the rich people won't spend as much, and they will see this play out in their life as well from rich people not
Yeah,
spending.
it might just be kicking the can down the road. That's
Yeah.
literally all this could all be. Like you have a great 5 to 10 years, but eventually the tsunami is going to hit everywhere and you have to adjust. You just do or you'll be left behind.
Yep. Yep.
But I love the opening of the market. I'm seeing this right now. SPY, QQQ, they're improving. But guys, I gotta say, like, just keeping on this QQQ, like when I stop getting defensive, it's at 490. Like we're still over 2% away. So even yesterday's strong finish today is showing somewhat of strength. Powell speaking this week. We have Jensen's keynote speech at the GTC event this week as well. Like those could potentially be the catalysts to take us above 490. However, like I also want to see us stay above 490 and like make sure like this isn't just a head fake move. And even right now, like we're below March 10th high, which is 43. Like we're still experiencing a lower high, and that might be the next rejection level. So like it's just
And you're also working off the oversold condition, right? So these
totally.
things become very dangerous. You're also Trump. You know, every day that go by is that the market isn't going down. He goes, you know what? I can bring back tariffs. You know. So again, you're fighting the clock here, and so no one's gonna dig in. And then the analysts start getting nervous. So today, Reddit, like I don't know why they didn't get down. If you pull up RDDT, today it's getting downgraded, right? Like where was the analyst when it was at 230? So analysts are just as emotional. The problem for analysts is they write these 50-page reports about companies, so it takes them much longer to change their mind, right?
Yep.
So, if you go back to an
It's
all
a
chart,
great point that I
yeah,
have not heard articulate. It is like they put so much time into it and so much research. It's like it's
very
you don't want
hard
to
for
flip
them
it
to, and
around.
then they get confirmation. But if you pull up the all chart, like the full chart of Reddit, it took forever. So now the analyst is going, finally, the world sees things my ways, right? And then tariffs
Yeah.
come along and valuations get shrunk, and he's like, what the fuck? Like, and it's very hard. It's kind of, even though they don't own the stock per se, it's almost harder because now the phone calls come in from all the clients, and the clients are like, what's going on? And the analyst sends this 50-page report around and saying nothing's changed. Well, everything's changed, right? Like I said, like Reddit probably had 5 corp dev deals that they could have used their $200 stock to buy companies, and those deals are off the table. You're not going to hear about those deals, but they're off the table. So this can compound the other way. And then finally, the analyst comes out and goes, you know what? It is overvalued after the stock's down 50% already. So we're already starting to see that. These are just systems. It's just like a machine that's just a bad machine that continues to play over and over because of the way the game is played. And so I think, yeah, I hate to be the negative person because, I'm super optimistic, but at the same time, you have to stay in the game. And right now, it's like there's a lot of warning signs that say, buy higher, not low, buy higher or
Yeah.
buy lower, but don't buy right here,
Yeah.
you know.
So
So I'm
that's
sticking with that.
Howard. That's where you're at with Reddit. You think it's an interesting company, but even though
I
it's
bought some
halved,
last week. I
okay.
added it to my degenerate economy index because I think they're the leader. I don't use Pinterest and I don't really use Reddit, but I think those two companies in a niche have so much data, much like Stocktwits has, but we're just at a much smaller scale. They
Yeah.
have this unique data set that the machines will have to eventually,
To,
cut deals with,
I
right?
mean, to follow up with what Howard's saying about that, like I worked at corporate strategy at Lionsgate. Whenever we launch a new IP, new movie, trailer, the only tier one data set was Reddit. Everyone else is
Wow.
tier two, tier three because you can really get the sentiment of quality data in Reddit that no other platform can really replicate. And in this LLM arm race that we're in, these machine learning products, they're only as good as the quality of data that's inserted into them. So
Mhm.
because they're the tier one quality data out there from all the social media websites, like they were able to sell advertisements, sell like their data a lot more of a premium price than was acknowledged before IPO. And they took advantage of that. But if the LLM arms race is not slowing down, but making becoming more democratized in the post DeepSeek playbook, maybe the premium that they're charging isn't going to sustain that level.
Sure.
And that's what like Howard's kind of elaborating where the corporate deals are getting those might be removed, and if they continue snowballing, you're going to start seeing that pricing power that they had diminish a little, and there's a lot of cyclical risk associated to Reddit that a lot of people don't realize. So
Yeah.
I think $200 is wild to me, but they're capitalizing on a high tide result boats in this LM arms race. But if
Yeah.
capex plateaued and everyone's reevaluating, Reddit is a sympathy play on that pulling back a bit.
Yeah. So again, it's the markets are very tied into the U.S. economy, even though the bond market is like, I don't know, 10 times the size, 100, whatever it is, it's just that much more important. But it's the sentiment side of the American economy is still very much tied to the stock market because
Mm-hmm.
even though you say not everybody owns stocks, well, the people that own the stocks have human brains and they have fear and greed just like everybody else, and they control a lot of the purse strings, and they leverage up their portfolios, whether it's Elon or Jeff Bezos, in different ways, and they have different ways that they have to deal with this stuff. And when the market's going up, just a lot of mistakes get made, but at the same time, the mood of the country kind of is in a different space. But again, I'll come back to one thing. One thing we know from the chatter is that the world is deglobalizing, right? If you look at what's happening, the flow of money and you look at people mentally and physically and yelling, putting up borders, and that's showing up in the commodities, right? And these things have a tendency to go in very long cycles, right? If you follow the textbooks. And I think what Trump and Musk and whoever at the top is in the room trying to think about, they're thinking about rate. If you're to believe their story, all they think is matters is getting rates down. Okay. Now, if you were to believe that, and let's give them the benefit, let's just say that's what they're doing. I have very little confidence that a group of people can get in a room that can't even deliver a message about tariffs and come out of this with a plan to get rates down. Okay, I think it's one thing to be able to get a stock down or a stock up. They've proven they can do that. Elon and Trump. They've proven they can do that many different ways. It's another thing to move the bond market of a 300 million person economy with rates tied to the rest of the world and other people buying their treasuries. I'm very skeptical that that's their idea, because if that's their idea, it's a bad idea. So that's what I worry about, is that they just have bad ideas and that they're so egotistical that they think they can pull this off. And I'm skeptical of that. So I'm playing defense. And if you're going to play offense where the charts look good and where the money flow looks good. And that's in a deglobalization type of businesses, which young people are not used to owning because they've never heard of the companies.
Yeah.
And they've never heard of the countries where those companies are headquartered. For the last 10 years, the headquarters was my home. Oh, let's take a look at your crib. That's where the headquarters are. Now it's in like some part in Frankfurt and another part in Brazil. So these are all new dilemmas.
I do think that the difference in today's day and age is like you can exchange ideas in places like Stocktwits and Reddit and have that moment of discovery where maybe 10, 15 years ago, that would have been much harder. But I think you're right. Like looking at like the stay-at-home stocks from COVID, where things we were all interacting with, the Peloton, the Zoom, it's like this other level of like you need to really dig into something that you have never bought, you have never experienced. It's from a different country. But I think that's why having kind of a place to exchange ideas becomes even more important.
Well, it's a different peer group. My friend Lewis Johnson is like, I fish with him. We're like old farts. And he's seen a few of these cycles before, and he's been warning about this deglobalization before tariffs. 2 years ago, when he was just worried about growth stocks, he started talking about deglobalization, because this is what happens. These certain stocks, the Nifty 50, they get so carried away with it that people get pissed, right? It wasn't just Trump. It's like Europe's pretty pissed. That they relied on Google and they relied on Facebook, and they don't have their own Google or their own Facebook. And now AI with Mistral, they have a chance with Mistral France to have like a big AI company. If they don't take it seriously, then OpenAI and Anthropic are going to take it away from them. So they have memory, right? And just like you said, with young people, they got into investing, but they got into investing on this. You know how many stocks you can look at on this? 8, right? You know how much Shai's parents, how many stocks we could look at when in a desktop world when we were looking at it? 500, and then we had 3 screens, and we knew everything. Even though we knew way too much, we knew everything, right? Because we knew how markets interacted. When you have 8 stocks on your thing and they've gone up for the last 10 years, why would you add a 9th stock, right? And so if you're going to be in the business right now and really love the markets, you're going to have to learn that quite possibly there's a different set of companies that are going to end up being on the front screen of your Robinhood app in 3 years. And are you prepared to do that? Otherwise, you'll be looking at stocks that are 30% lower in 5 years, and you're just going to be the boring guy. Does that make the rounds at all, Shay, or Shy or Katie, with any of your friends?
Yeah, I mean, I think the perception of what kind of returns you're supposed to get in the equity markets got completely destroyed in the past 2 years. Where my goal has always been on the growth portfolio since it went public in 2022 was give me 15% a year. That's what I'm aiming at. I'm gonna be happy. It was substantially higher than that past 2 years, but I still maintain that this year. And now, like this year, when I communicated before the year, my goal, like I'd be really happy if it hit this if the market was at high single digits this year after the past 2 years, everyone thought that was a bearish take, and that was like that's crazy to me, guys. Like nobody's assuming like a red year at all. Like when we had that 2022 bubble burst, it was disgustingly painful, but it was kind of short lived a bit, where it was just one straight year of down, 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 and eventually it was just nonstop for the next 2.5 years. People aren't accustomed to dead years. There's dead years that occur. I forgot what the last one was, but it was there could be 3 or 4 years of just like nothing really happening in the markets. And I think that people's perception on like a 15% ROI is elite. It is. That's not the conception. That's the people don't
Yeah.
believe that anymore in our generation. And that's where there needs to be a reality check and a detox as well. It's not just economy, consumer spending. Like it also has to be perception, has to be detox to go back to towards the mean of making money is actually difficult. And if you do 10%, that's incredible. But error on you might lose it, and that's why a lot of people went away from the fixed income route. I think the fixed income route could have a renaissance a bit if we continue the way we're going down in the geopolitical route. That's going to affect equity markets. So I think it's a good thing, short-term pain, because there need to be a reality check, but it's painful because people are going to hold the bag. They in 23 and 24 we bounced at this. We bounced as a
but
V shape.
this is where you have to be ruthless, and you can't save everybody, right? It's like
Mm-hmm.
on Stocktwits, I tell people, why are you arguing with that person? Like, he's in Tesla, he doesn't see it. Go worry about your portfolio, right? This is a very personal thing. I don't know why people think they can save other people, right? There's good ways to invest. Books have been written. People like to think they can reinvent the book. A few people can. Most people really know where the mentors should be, indexing, dollar cost averaging. I like direct indexing because you can get the tax loss harvesting on the way down. Whereas when stocks are going down, you're tax loss harvesting, right? And then I also like the idea of understanding how money and flows, right? And again, there's like I said, there's two big trends right now: degeneracy and deglobalization, right? People want to bet, right? It's not really good for, I don't know what it is, but it's just free time. Like if you take what technology's given young people, it's free time, right? They worry about 1,000 other things than they used to, than the things that I had to worry about, which was I had less free time. Like the weekend was my weekend. Now every day's a weekend. And so degeneracy is exploding because if you hand a person a magic wand and all the apps that go along with it, you can do a lot of damage. Okay.
Well,
And then on the
how,
other hand, that deglobalization thing, I feel bad for the kids that would travel, like the Katies of the world, and me, the younger people, my daughter, my son, who want to travel all, and that may be taken away from them because certain experiences may
I'm not
be
afraid of people being mean to me. That's fine. They can bring it. But I think it's a good point. But I do think Americans have always been a little, depending on where you go.
well, I think Howard nailed it on the degeneracy, and I think that there's a
Yeah.
news story that dropped today. I think symbolizes the worrisome trend we're going down. Robinhood launched a prediction markets for March Madness. You can bounce sports now
Oh, they
for
did
this
launch
month.
it? Hang on.
That combining a brokerage accounts with
Yeah.
literally Vegas casino betting into one platform, that is kind of symbolic on the degeneracy theme that we're kind of entering for investing, where those should be different, but they're consolidating it because, again, Robinhood is a very easy corporate development deal, like he's referencing, where they can expand their TAM by just partnering up with like these
Was it
specific
Kashi? Did they partner with who'd they
Kashi.
partner?
Yeah,
Yeah.
it was Kashi. So like,
But
I don't love the
let's be
symbolism of
let's
it.
it's
I'm
a great
fine with
topic
this.
because
I feel like this is just them building for their audience.
yeah, I would say let's be honest with degeneracy, because when I was an early investor, I was a seed investor in Robinhood in 2014, and if you said, Howard, the original question in 2014 was, I don't want to invest in Robinhood. How are they going to make money? Right? This is how people ask stupid questions at the wrong time. And of course, you'd be lying in 2014 if you knew. Like, so if Robinhood had told you what their plan was, and I knew what their plan was, they didn't have a plan because the plan was to build an app that hopefully a million people would use. That was the plan. Because if you can't get to a million users, what's the point of having a business model, right? That's the way the world worked in 2014. So here we are in 2025, okay? And like Katie just said, of course they're going to do this because that's what their audience wants. Give the people what they want. The other thing about this is I never bet on sports. I can't wait to finally, with my son, because I don't understand how to bet on sports and read the odds. Just like a HP12 calculator, I didn't understand how to work it. So I don't understand how to work DraftKings and fantasy. But if on my Robinhood app I can lay $10 because of the way they've set it up with futures contracts and have a $10 bet, I'm all for it because that's $10 I never would have bet before. I'm not going to go bet the family nest egg. And so you can't protect the 1% that is going to, you know, lose the family nest egg for the 99% that are going to get the degeneracy one way or the other. So I'm not commenting whether this is good or bad. I'm just saying this is inevitable because degeneracy, wherever you can imagine degeneracy going right now, from vaping to betting to parlays, it's going, and it's going to go there very fast. And so we're better off educating these kids on how to deal with this stuff than worrying about this stuff. So I think we're in day one of degeneracy, and why do we need 700 apps?
Well, I was thinking about this the other day of like, okay, now March Madness is kicking in, or say Super Bowl. I would love to see the data of flows into a DraftKings versus a Robinhood side by side in those windows. And I wonder if they, you know, it is like I got $100 in my account. It's March Madness. I'm going to bet on the tournament versus put more into NVIDIA. And this is them just sort of hedging that behavior that's already happening in one ecosystem. Yeah. Or is it someone's throwing money over here, March Madness, and they're already in the app and they're like, oh yeah, I'll add some to my, you know, Tesla.
Okay, let me tell you where this is going, Shai. So I'm going to have a Sui wallet or a Solana wallet, right? And it's going to be, I can still have a fake name tied to my account, but I can have my real name, KYC, tied to my wallet. In 3 years, I'm going to be able to, with KYC, first of all, bet my friend on Stocktwits where NVIDIA is going to close, or bet 1,000 people that it's going to close on earnings above 30, and then it's going to be parlayed to the game that night, Cowboys versus Steelers, right? So you're going to have you're not just going to, men are going to, this is like Bloomberg has had sports on its terminal forever, right? So these worlds are going to meld where a parlay from the market's going to carry on to a game at night. So the worlds are going to collide. Sports and business are going to collide in a way that and collectibles and all this stuff. I don't know how long it'll take, but it's all going to collide. And it's all going to collide around stable coins and wallets and LLMs and settling of bets without DraftKings, right? It's going to settle on the blockchain. So I think if you're Robinhood, I've always said this, like it's much easier for Robinhood to become DraftKings than it is for DraftKings to become Robinhood. It's much easier for Robinhood to become Coinbase than it is for Coinbase to become Robinhood. Totally. Because Robinhood started out where all the users actually are with their actual money. Now, I'm not saying it's good or bad, and a lot has to come up to execution, but this is just where it's going. And kudos to Robinhood and Vlad, like I didn't see that, like for executing on this level and at least pushing the envelope. You know, the CFTC does not want this, by the way. So it's like the options and futures people are going to try and stop this.
Well, they disbanded that, right? They don't even exist. So
Shai, now they're back, right? Like Robinhood learned a few lessons, kind of like the velocity. It's like Jurassic Park. Like when you sit down in the movie the very first time, the both of you, you're like, they're going to the guys are going to have sex with the guys, and there's going to be more velociraptors, and they're going to break through the fence. You know, the first time they're touring the park, and the one guy goes, well, this isn't going to fucking hold them. And everybody in the theater knows this isn't going to hold them. And it's the same thing with degeneracy. You know, even though I'm making it up right now to you, but the fact that I can make this up and see the future, and I'm like 90 years old, trust me, the 30-year-olds are totally seeing this future. And they see a world in stable. Let me give you another world of stable coins. You lose a bet with your friend. You hate Trump, or your friend hates Trump. How are you going to pay your friend in a bet? You're going to pay him. You're going to send him 17 million Melania coins, right? Because you got stuck with them, right? And they're worth the 17 million Melania coins are worth $42, right? And you're going to pay your Venmo bet with 17 million Melania coins because it's money. And because your friend, it's like you just fucked him. He's going to have to go now convert 17 million Melania coins. Or he could hold the Melania coins and come back to you in 2 years and go, you idiot, you just handed me $42,000. So there's just going to be this whole world where emojis and meme coins are some kind of weird money that people use to prank each other. Because stable coins exist and wallets exist. So I think this all merges with degeneracy.
I want to hear what Shy thinks, because Shy, you're like in the sweet spot of all. You're like a 30-something.
My son is in the sweet spot for sure too.
Yeah. What do you make of all this?
As a 31-year-old who has degenerate friends, former degenerate himself, turned more TradFi, I will say, I think what we saw in Trump and Melania coin, I think that's the beginning of something much larger. I think there's going to be weaponization on IP for celebrity status. It might not be in the stablecoin space, but I think you can eventually you're going to be able to invest in celebrities. Like you own Blake Lively and Ryan Reynolds stock, and then that whole PR happened, you're down 25-30% of your investment type thing. And I think there's going to be ways of capitalizing on people's IP and celebrity status, and I think celebrities are going to adopt it because not just their own personal brand, they care about it, but now they can monetize it. And I think that's the beginning
of
like
very big markets there. I still think it comes back to like what Robinhood's doing on events, big events in the markets.
Oh, I'm talking like 15, 20 years. I think this is like beginning.
15,
it's going to morph into something like that.
Many cycles in between that of highs and lows. I think where you got to really like where Robinhood's trying. You can't get too far ahead here. Meme coin, the crypto people always get too far ahead. I think now you have what Robinhood's doing. Katie even remembers they tried this with the Super Bowl and they had to break the bets, right? And probably Katie and I were wondering, well, okay, I kind of that would have been cool. And I don't think Katie, without you mentioning it today, I didn't think they were going to do a college hoops one.
Shy spotted that one. I can't take credit.
So
I will say my path into sports betting started with the women's tournament last year, because I feel like if I'm going to blow some coin, I'm going to do it in the women's game, because that's how we get even.
This is the Velociraptors probing at the fence, right? And
ripping Newman's face off just inside the.
But you knew it was coming. And what I'm saying is, now that you say that the NCAA tournament's up, it's like, of course, good on them. CFTC is going to have a better argument for stopping this type of trade. Am I worried about the two kids that are really going to steal money from their parents and overbet? Yeah, but we can't protect in a country this size. Right, in a country that's allowed like DraftKings and FanDuel and all these athletes to do this, where are you going to draw the line? And I'm not saying it's good or bad. I'm just saying I don't want to be the line drawer anymore. And you know what the line is? Teaching your kids how to respect like these things. We're all going to struggle with that because degeneracy reigns. But the kids gave up drinking, right? The kids are slowly giving up drinking for.
They might not be able to afford it. Could be the thing, but yeah.
Okay.
The new sex ed class could be degeneracy class in high schools and middle schools, like learn how to beat these systems.
But
like,
at least they're learning a language. At least they're learning a language. And again, it's math, right? And if you don't know math, like my son who's struggling with math, because only someone who struggles with math would put on parlay bets as their bets of choice. He'll call me and I'll go, dude, this is why math was important. You are the sucker in the room. And
Dad, the opportunity, Dad, I could 10x.
Yeah, if he had just made that shot from 72 feet over the clown and around the dancing hooligans, my 72 team parlay would have paid off and I could have bought a home. And I'm like, okay.
You never know.
We're not related. I guess we're not related, son.
I hope he hits, just so he can come on and be like, I just bought a compound.
No, but here's what I'm saying about my son. he knows that too. So
Yeah.
he thinks by betting $5 that he won golfing that day, it's fine. So again, he knows that but wouldn't it be, he's never going to learn how to trade zero dated options because he doesn't care. But if he found out his dad had a $3,000 bet on where Nvidia, over under where Nvidia is going to close, and he could put $100 on his dad's bet, would I think he's stupid? No. Like, I would say, okay, you want to make that zero dated bet? Go for it. Like, and you want to tell 10 of your friends about my bet? Go for it. So I think we go off exchange for a lot of this stuff to teach kids, rather than them learn investing and math than doing stupid things. So I think degeneracy will beget more degeneracy, Shy, which will get people to realize, I got to understand how this game is played, because it's going to be a game I play for 60 years.
Totally.
Yeah.
And there's no better way to understand how the game plays than tuning into this show every weekday at 9 a.m. And we're at,
You too, yeah, you have energy. I'm now worn out for 2 weeks.
yeah, we're at the 10 a.m. mark, and you guys got to get to your day jobs or your degenerate gambling on Robinhood. Either one could work out for you. But Howard, thank you so much for jumping on today. Shy, it's great to see you. We will be back tomorrow. Share with us your brackets. Share with us your bets on X and other places, and we'll see you tomorrow.
See you, everybody. Thanks.
See ya.